everybody, it's Tortoise Investing coming at you today with 3 dividend stocks that you can buy and hold forever. I know I usually do 5, but I'm going to try and make the videos a little bit shorter. Hopefully you like that more. Let me know what you think in the comments down below. If you're new, subscribe, hit the like button. Super free, super easy to do. It helps me a ton with the YouTube algorithm. It's very stubborn, so doing those things helps me out a lot, and I greatly, greatly appreciate it. Before we look at the stocks, we're going to take a look at my portfolio. None of this is financial advice. Just want to put that out there. Always do your own research. But this is how things are looking currently for the year to date. As you see, we're up 15.84%. These are our holdings. We can go to the holdings tab. Again, this is something I will never hide behind a paywall or anything. I will be transparent with this through and through forever. Bottom 3 positions are these, and of course, whenever my paydays are rolling in, I'm going to dollar cost average down, throw a little bit in SCHD, and just keep on trucking. I'm happy with my holdings. There are a couple that I've got my eyes on that I may or may not add in the future, but as of right now, 1 ETF, 6 stocks, I'm happy. Now, the companies we're going to be taking a look at, we got Lockheed Martin, we got Tractor Supply, and we got PepsiCo. Lockheed Martin's first we're going to look at. It's got adjusted free cash flow yield of 5.68%, dividend yield of 2.97%, a payout ratio of 43%, so pretty good there. I have this pulled up so we can see it has fallen from its recent high back in April 18th of 501, fell over 20% till right now, so down about $100 a share. Might be a great buying opportunity. Again, do your own research. We'll take a look here. Revenue has been increasing at a rate of 5.27% over the last 5 years. The free cash flow has been increasing at a rate of 25% over the last 10 years. Look at that. Up and to the right. Very nice. Like to see it. They do have some debt, and if you look at the quarterly here, their debt is at $17 billion currently. It's still not an issue with this company because my rule of thumb that I always go by is I don't like companies have 3 times more than their EBITDA in debt, and this company does a pretty great job at keeping things balanced. The dividend has been increasing at a rate of 10.6% over the last 10 years, so pretty nice. And if we take a look here at the shares outstanding have been decreasing at a rate of 2% over the last 10 years and 4.6% over the last year, 3% in the last 2 years. So here recently they have been buying back more shares, which I love. You want your companies to do that, you get a bigger and bigger piece of the pie. Now we look here at return on capital employed. This has pretty much been in the 20s since 2018. It's been 24 to 22, which is very, very nice. Next up, we got Tractor Supply. It's adjusted free cash flow yield of 2.67%, dividend yield over 2%, payout ratio 38%. Again, all check marks from me there. Take a look at the stock price here. Year to date, it was at a recent high of right at $250 in April 24th, now down 18.2%. So if we take a look here, revenue has been increasing at a rate of 11.78% over the last 10 years. Very nice. Free cash flow right at 10% over the last 10 years. Again, very nice. Take a look at the quarterly. The debt is $1.41 billion. This company has a good history of having a very good debt to EBITDA ratio. Their EBITDA last year was $1.78 billion, so no issues there whatsoever for me personally. Like I said, it's just what I look at. The dividend's been increasing at a rate of 23% over the last 10 years. That is crazy. Their last hike came in right at 12%. Very nice. This is obviously throwing some things off because from 2021 to 2022, they increased it by 40 cents. It's like almost double. So, I mean, I'll take it, though. I'll take it. Shares outstanding, they've been decreasing at a rate of 2.57% over the last 10 years and very consistently buying back shares. If you see here, 3% in the last year. Again, I love that. I love a company that buys back their shares. I love companies that have a great balance sheet. And the return on capital employed with this one is also very strong. If you look here, 18% back in 2019. And it's just been growing ever since. It's a 23% as of 2022, which is very strong. The market average, I believe, is around 9 to 10% for return on capital employed, so that's pretty good. Next up, PepsiCo. This is a favorite amongst a lot of people. It's got free adjusted cash flow yield 2.43%, dividend yield over 3% now. Payout ratio a little bit on the high side, but that is something that I know they're going to take care of. It's Pepsi. They've been increasing their dividend forever. It's going to have a slightly high payout ratio, but again, I feel like they're going to keep on trucking right along. They have so many things, so many products that we all enjoy and love. Let's take a look here. Excuse me. Recent high of 196 as of May 12th. Currently down 18.2%. So a lot of these are down quite a bit. Take a look at the revenue. Revenue's been increasing at a rate of 6.34% over the last 5 years. The free cash flow, it's kind of been stagnant as of late, but still positive. No big dips here and there. The EPS has been increasing at a rate of 5% over the last 10 years. And their debt, let's take a look at the quarterly for updated. $36 billion. Their EBITDA is, as of last year, was 14. So again, falls in line with what I like to see. The dividend's been increased at a rate of 8% over the last 10 years. Shares outstanding, slowly decreasing, but they've not been doing too much of that as of late. And return on capital employed 2020 was 14.49%, 2021 16.8%, and 2022 17.6%. So that is growing, and they got great profit margins. So yeah, those are 3 strong dividend companies. I really like these a lot. Again, always do your own research and stuff before just investing or buying anything, especially just what a YouTuber recommends. But I like these. These are some that I've got my eyes on going forward. Let me know what you think down in the comments below. Hopefully you enjoy the 3 instead of 5, so it's a little bit quicker. But yeah, like and subscribe for more, and until next time, see yins.